Welcome to Creating Wealth with Jason Hartman, president of Platinum Properties Investor Network in Newport Beach, California. During this weekly program, Jason is going to tell you some really exciting things that you probably haven't thought of before, or a new slant on real estate, fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 9 states. This program will help you follow in Jason's footsteps on the road to financial freedom through real estate. You really can do it. And now, here's your host, Jason Hartman.
Hello, this is Jason Hartman. Thank you for joining us for another podcast number 24. Today, I'd like to talk about a commonly misunderstood or not understood at all subject when it relates to investing, especially real estate investing. See, most investments are one-dimensional in nature. Conceptually, they're all about buy low, sell high. You buy a stock, you buy it low, you want to sell it high. Now, maybe it's a dividend-paying stock, so you buy low, you get some tiny little dividends and pay taxes on them all along, and then sell it and pay capital gains tax. Again, I'm kind of alluding to here the fact that real estate is such a tax-favored asset. You really never have to pay tax on your real estate if you do it right. It's very tax efficient. But if you buy precious metals, you want to buy low, sell high. If you buy bonds, same idea, right? Real estate, though, is so misunderstood because real estate has a multi-dimensional nature. Now, what do I mean by a multi-dimensional nature? Well, real estate has many dimensions, but in this podcast, we're just going to talk really about 3 of them. And we'll call this, as we've called it for many years now, the 3 dimensions of real estate investing. And the 3 dimensions are explained in a brief outtake I have coming up from one of our recent live seminars here in Newport Beach, California, in the OC, Orange County. So, listen and enjoy this, and think about how real estate has a multidimensional nature. It's not just about buy low and sell high. Here at the Platinum Properties Investor Network, we consider appreciation to be the icing on the cake when it comes to our real estate investments. The reason we say that is because appreciation is not as predictable as cash flow, one of the other dimensions of real estate. Cash flow is pretty darn predictable when it comes to real estate investing. And what you'll notice that's happening currently at the time I'm talking to you here in August of 2007 is that there is tons of press in the media about the mortgage meltdown, about how there is a credit bubble. By the way, I agree with all of this stuff. There is a credit bubble. There is a mortgage meltdown, no question. But the question is, does that ruin our chances of making a killing in real estate? Absolutely not. We've just got to adapt to what's going on and adjust our strategy. You'll see that landlords actually benefit from high interest rates. Landlords benefit when it is harder to qualify for loans because it puts upward pressure on their rents. So this improves our cash flow as investors. Now, many times I have talked about how money is on sale in not one way, but 2 ways. Most people think of money being on sale as, well, interest rates are low. They're the lowest they've been in, 3-4 decades. Very good thing. But also there's another dimension of the money sale, and that is ease of qualifying or ease of obtaining loans. Now, this ship is leaving the dock. I want you to understand, as I have been trying to say for years now to our listeners, that you have got to do what you do when every other product is on sale. When you go to a store and you want to buy something and you see that it's on sale, I bet you do just what I do. When it's on sale, you probably stock up. Well, you know what? Money is on sale. It's still on sale. Historically speaking, money is very cheap, and even in the midst of all of this talk about credit bubbles and mortgage meltdowns and so forth due to totally irresponsible lending over the last several years. By the way, this is no surprise to us. I predicted this 3.5 years ago. Everybody told me I was crazy, the Ponzi scheme can continue, and banks can just keep loaning money to people that should never be borrowing it in the first place. Blah, blah, blah. You have no idea how much dissension I was met with when I used to say this 3.5 years ago. But guess what? Like so many of my predictions, this has come to pass as well. So point is, money has been a little bit cheaper in recent years in the post-9/11 world, but it is still historically very, very cheap. When I got into the real estate business in 1985, if you wanted to buy a rental property, you had to put 20, 25, or even 30% down. Even in the midst of this credit bubble, this mortgage meltdown we're in now, which had to happen, this adjustment had to come, you can still get properties with 10% down on high quality, very cheap loans, very good fixed rate financing. Think about it. You lock in your cost of borrowing for the next 3 decades. Where else can you do that? As the mortgage rules get tighter, and I think rates will initially dip a little bit here as the Fed has loosened the money supply. Last week, they just announced that they have lowered the discount rate to pump more liquidity into the capital markets. So these things benefit us as investors, but it is getting harder to qualify. A few years ago, you could get nothing down on conventional financing for investment properties. You still might be able to do 5% down, but that is quickly coming to an end. 10% down you can still do, and I say my prediction is that in the future you will have to put 15 or 20% down. So take advantage of the money sale. It's still occurring, but supplies are limited. Stock is running out. Borrow money. We have loads of inflation coming at us in the coming years here. We have 2.5 billion people in China and India that are moving toward middle-class lifestyles. We have wealth that is being created on a global scale that has never before been seen in human history. The deep fundamentals of this real estate market are incredibly good as long as you buy right, you buy prudently, you buy in the right markets. And by the way, when I talk of the right markets, I want to mention something else about that. We've done a couple podcasts profiling certain areas, and I want to give you a word of caution. We've profiled, I believe, Austin, Texas on prior podcasts, Mobile, Alabama, Dallas, Texas, all very good markets to invest in at the moment. But within the larger markets, when we do those profiles, I want to caution you, don't just run out and buy properties in these markets. You have to look at not just the macro market, but the micro market, the areas of each city. Is it on the north side, the south side? And then within those areas, north, south, east, west, city center, within those areas, what are the right neighborhoods within them to look at? What are the right tracts of homes to look at? Who are the best builders to be dealing with, to purchase from? What are the best styles of properties? Single level, two-story. What type of architectural style is most appealing? What community amenities do you want to have? I want to really caution you, please do not listen to market profiles where we talk about macro city markets. That is not enough information. You need to talk to our investment counselors and our area managers and get the scoop on the exact micro market within that city. We are currently in 33 markets around the U.S., and within each of those markets, there are micro markets that you need to pay attention to, because you can buy in the right macro market but still make mistakes because you're not in the right micro market within that macro market. Make sure you talk to us about details when it comes to those markets. So, Without further ado, why don't we listen in to this live tape here, and this will be